Yeah, good morning, everyone. Uh, Yesterday, US market were closed, whereas today morning, most of the Asian markets are indicating a positive trend. Even the futures of the US market are also indicating a positive trend. And though the dollar index has shown some marginal up move from yesterday's level, but is still lower than 107. Apart from that, most of the commodities are also indicating a positive trend, wherein oil is up by around $0.5, aluminum also 0.5%. Uh, Copper is down by around 0.5, but iron ore is up by around 1% and steel is up by around 0.5%. So we had seen yesterday also Indian market remaining range bound, though continue to remain negative during the day. But the Nifty uh, was not seeing any major sell-off. Since last 2 3 days, we are seeing uh, some buying at the bottom level. So quite possible we may see some turnaround happening in near futures. So indications from international markets are giving some positive indications. So quite possible we may see some positive trend or some bounce back in today's trade. I request technical team to take up from here.
Thank you, sir. Good morning, all of you. Today, the market is likely to open on a flattish note and we're likely to witness a range bound trading session. Yesterday, we have seen that the Nifty has shown a very strong pullback rally of almost 200 points from the day's low and maintain a good closing about 22,950 levels, which gives some sort of a relief sign. We have witnessed that no fresh sell off has been witnessed in the yesterday's markets, which is the good sign on the technical front. Going ahead, for the today intraday purpose, the immediate resistance is placed at around 22,900. Any move above that level, we expect, 23,000. 100 will be the first resistance zone. Any move above that level, we expect a positive momentum to be carried forward towards to 23,170 to 23,200 levels, whereas the support is placed at around 22,900. Any move below that level will witness some sort of a selling pressure, which might drag a Nifty towards to 22,840 to 22,700 levels. So the view will remain positive to cautious itself, but definitely a bounce back rally cannot be denied after such kind of a rally. So as long as Nifty sustains about 22,840 levels, this bounce back rally is likely to be continued on the higher sides. Coming towards the bank Nifty for today intraday purpose, 49,740 is the first resistance level. We need to keep eye on it. Any move above that level will see the extension of this positive rally towards to 50,000, 50,200 levels on the higher side. Whereas the support is placed at around 49,200. Below that level, 49,000 psychological marks can be tested. Coming towards the stock specific, SBI Life really looks good on the technical front. From the last three trading sessions, we are continuously witnessing that the stock is well placed above the 50 days moving average and maintaining a positive closing about the same. The daily chart indicates that RSI is showing some sort of a positive divergence. So the overall strength of this particular counter is really good on the technical front. We are looking for a target of 1530. So those who are having any long positions can hold on or can create a long positions at the current market price by keeping a strict stop loss of a 1445 for a target of 1530. That's it from my end. I request Amit to take a call forward.
Yeah, thank you. Good morning, everyone. So on the derivatives front, if we look at the overall data, there is not much of a change. The Y position on the call and put at the front is completely widespread because on the near to ATM strike, there is not much of activity from the OI front. As in last 20 days, we have seen that Nifty managed to show some reversal from the supportive zone of 22,800 level and coming near 23,000 mark, but still Nifty is trading in the range of 22,800 to 23,200 level. Till the point of time this range is not getting broken out, till that point of time we will see the range bound momentum in the market. PCROI also trading near 0.87 level, that is also trading in the range bound zone. Only the concern part is India VIX. India VIX yesterday closed at 15.72 levels. As previously also I told that till the time India VIX is not going below 13 level, till that point of time we will see market situation to be in the cautious to the range bound front. While in yesterday's session, as we have seen that the Nifty managed to show some pressure in the first half, but in the second half Nifty managed to show some positive pullback, due to which there was a strength in the stock specific front also. That is giving some confidence for the today's market in the first half to show some positive momentum on the upside. Once if Nifty in today's session on the intraday front managed to give clearance about 23,000 mark on the spot specific front, then we will witness a 100 to 150 points momentum on the upside level with the support of 22,800 zone. While on the stock specific and sector specific front, counter looks positive will be Ashok Leyland, Manappuram and Chambal Fertilizer looks positive. On the negative front, Policy Bazaar, Deepak United and India Mart looks negative. So that's it from Better front. Thank you.
Good morning, everyone. On the news front, KIMS Hospital enters into strategic partnership with Ushakal Abhinav Institute of Medical Sciences, that is UM's hospital in Sangli, Maharashtra. This is in line with their strategy to enhance its presence in Maharashtra. For the same, it has taken the first step in the year 2022, where it had acquired Kingsway Hospital in Nagpur, and further it has announced a 300-bed multi-specialty hospital in Thane, which is expected to commence operations in Q1 of FY26. This partnership with UM's hospital will add 356 more beds, which is one of the most advanced quaternary care hospitals in the Sangli. Also, UMS has announced the launch of comprehensive daycare oncology center, which is going to be the adjacent to the hospital, and the same is under construction and expected to be commercialized in the calendar year 2025. So overall, this is positive for the company. Yesterday, Finotex Chemical hosted the con call. On the result front, if we look at the top line, it had degrew by around 9%. So the management highlighted there was a order postponement which was observed in Bangladesh due to delayed issuance of a letter of credit, and this has impacted the volumes where Q3 volumes were gone down by around 5%. And there was also slight pricing pressure of around 3%. There was a pricing drop. The management also highlighted that on 9-month basis, there was a muted demand in FMCG space. Overall exports has gone down to 19% from the 22% of overall revenue. The management expects better performance in the future, where it has already seen the stable performance in Q4 from the Bangladesh side. Despite these challenges, it has added new customers in textile space. Textiles contributed around 70% of the overall revenue in 9 months, and the rest is from the FMCG and other segments. In drilling chemicals, it has seen growth of around 30 times on a YY basis on a low base, which ensures good growth in this space. The management expects that China will not be considered as a much preferred supplier for oil and gas and drilling chemicals, where India plays an important role, and one can expect 5 times of more purchase from India. This requires expansion in this space. Yesterday, we also given the update on the Aquastrike product, for which it has received approval from the Central Insecticides India, and currently it is selling to a couple of countries, which includes Malaysia, where mosquitoes are not there, but it is mainly used for the water preservation. In India, it is expecting the market size of around 1,000 crore. While the outlook is not given more specific. On the operating level, the company has seen the improved margins at around 27.2% on the sequential basis. On the capex front, it is expected to add more 15,000 tons capacity in addition to existing capacity of 104,000 tons, which is under commissioning now. Also, it has now 350 crore cash on books, which is mainly led by the QIP fundraising that it had done in the month of July. And these funds are taken for the potential acquisition, while the company is evaluating the proposals. and it will be focusing on the EPS accretive opportunities. Also, it has highlighted that recent slowdown in the chemical industry has given a lot of opportunities in this space, and in terms of the merger and acquisition, and they are judiciously evaluating these opportunities to ensure the future growth. On the business front, the management is positive on outlook for both textiles and FMCG and other segments such as oil and gas drilling and water treatment chemicals. Um, and it will continue to invest in advanced technology to bring more efficiencies. The stock is trading at a PE of 18 times to FY26 earnings, and we are positive on the company. Thank you.
Yeah, yesterday ABB came up with the numbers. Result was apparently from the financial point of view, it was ahead of expectations, wherein revenue came in at 3.36 billion, 33 billion, whereas the expectation of 31.6 billion. But the and also the EBITDA margin has also shown improvement versus expectations. It came in at 19.5% versus uh, expectation of around 18%, and last quarter 18.6%. But the key thing is that the order booking has shown some slowdown, wherein the order booking was at around 2,700 crores versus last quarter around 3,300 crores. This is being the lowest order booking in a quarter in last 8 quarters, and which is a bit negative for the company. And we are seeing some slowdown in fresh order booking for ABP. And though the share has corrected in last uh, few months, and now the valuations are at around 46 times, but the overall direction, since the order booking are coming down, are neutral from here. So overall, because of the order booking, the result is below expectations and the outlook is neutral for the ABB. Uh, that's all from us. And I'll request commodity team to take up from here.
Thank you very much, sir. Good morning, everyone. So, in today's session, we are expecting a pullback in commodities. One can initiate a buying gold around 85 100 with a stop loss of 84 700. On upside again, can test 85 700 800 levels. Wherein silver, one can buy around 95 500 with a stop loss of 97 400. On upside again, 96 300 500 is the level where one can book profits. Copper prices are consolidating from 870 to 860 levels. So for a trading purpose, one can buy around 864 with a stop loss of 860. Again on upside, 867 70 is the resistance area, so profit taking is advisable on higher end. And in zinc, one can initiate a buy around 268 with a stop loss of 266. We are expecting prices to test 272 to 73. Crude oil also, one can buy around 62 10 62 20, and maintain a stop loss of 6170. On upside again, 63 20 63 50 is the level where one can book profits. Natural gas, we are expecting prices to cool off. So selling around 318 is recommended with a stop loss of 330. Again on downside, we are expecting prices to test 300 levels. So for our trading purpose, one can also buy around 300 with a stop loss of 290 for a pullback. That's it from us. Thank you very much.